One morning, you get this notification on your phone. Tesla just gained $100 billion in value today. In just one day. Do you realize what $100 billion means? That's more than half of McDonald's entire value. But how can a company create that much value in just 24 hours? The answer is far more complex, far more psychological, and honestly, a modern financial fairy tale. This isn't just the story of Elon Musk. It's the perfect intersection of belief, trust, algorithms, investor psychology, and timing. When Tesla was founded in 2003, the automotive industry didn't take it seriously. Electric cars back then were either a joke or science fiction. And Elon Musk, the founder, wasn't an automotive engineer. He was a software guy who made his fortune from PayPal and decided to invest it in electric cars. To Wall Street, that wasn't visionary. It was eccentric. Years went by. Tesla kept losing money. The quality of its cars was questioned. Elon Musk made wild statements on social media, argued with employees, missed production goals. From the outside, the company looked chaotic. In 2018, he tweeted, "Am considering taking Tesla private at $420. Funding secured." That tweet triggered the SEC. Lawsuits followed, and Musk nearly lost his CEO position. But then, things started to change. The world itself started to change. The year was 2020. While the pandemic shook the entire world, central banks printed unprecedented amounts of money. Interest rates dropped to zero. People stayed home. Planes were grounded. Companies were closing. But the stock market was rising. During that period, mobile trading apps introduced millions of young investors to the market. To them, Elon Musk wasn't just a CEO. He was a rock star. Tesla was no longer just a car company. It had become a tech movement, a symbol of green energy, a cultural phenomenon. Then came the bombshell. By December 2020, Tesla would be added to the S&P 500 index. The S&P 500 includes America's 500 largest publicly traded companies. Getting into that list isn't easy. You need consistent profits, high liquidity, and strict transparency. And here's the key part. There are trillions of dollars in funds that mirror this index exactly. Once Tesla joined the S&P 500, these funds had to buy Tesla shares. That meant hundreds of billions of dollars in potential demand. So the moment the S&P 500 announcement dropped, Tesla's stock started to climb. But the real explosion hadn't even happened yet. January 25, 2021, a Monday. Before the market even opened, Tesla's stock was already up more than 10%. By midday, the rise hit 20%. Its market cap jumped from $834 billion to $934 billion. That's a $100 billion increase in a single day. There were several reasons behind this surge. Funds were buying after Tesla joined the S&P 500. Investors were optimistic about the upcoming earnings report. Elon Musk was tweeting about Bitcoin and Dogecoin, grabbing headlines. Algorithmic traders were following the upward trend. But more importantly, investors began to see Tesla's potential as limitless. It wasn't just about cars anymore. It was about AI, battery tech, energy storage. In their eyes, Tesla represented the future itself. Let's look a bit deeper. At that time, Tesla was one of the most shorted stocks in the world, meaning many investors were betting its price would fall. But as the price kept going up, those short sellers were forced to buy back shares to close their positions. That triggered what's known as a short squeeze, a chain reaction that made the stock climb even higher. Meanwhile, the options market saw heavy demand. Market makers had to buy Tesla shares to balance their risk exposure. That added more fuel to the fire. It became a perfect loop. A fund buys, the price rises. Algorithms follow, price rises again. Short sellers close positions, price rises further. And this cascade of reactions added $100 billion to Tesla's value in a single day. But here's what we shouldn't forget. This wasn't just about technical factors. At that moment, Tesla wasn't merely a stock. It was a belief system. Elon Musk wasn't just a CEO. He was a cultural icon. For young investors, buying Tesla meant investing in the future. It wasn't only about making money, it was about being part of a revolution. That emotional connection went beyond financial logic. People weren't checking Tesla's P/E ratio. They were checking Musk's tweets. A company's value isn't always about what it sells. It's about the story it tells. And Tesla's story, on that day, was worth $100 billion. So, what can we learn from this story? Financial markets aren't just numbers. Perception, psychology, social media, and timing, they're all explosive forces. Sometimes, telling the right story to the right audience at the right time can create a $100 billion impact. Even today, people still debate whether Tesla truly deserves its valuation. But one thing is certain. What happened that day will be remembered as one of the most extraordinary moments in modern financial history. Now tell me in the comments, do you think that value was earned, or was it a bubble?